We don't sugarcoat anything. We try to get straight to the point. We try to give it to you as objectively as possible. And I hope you guys can appreciate that and find value in it. If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi and welcome back to Courtside Financial, the channel where we dissect the twists and turns at the intersections of business and technology. Today we're going to be talking about NIO and how NIO is clearly going through some things, but how they plan to overcome the slumps of the market through their brand Alps, which will be released next year. So we're not going to leave out any details in this video. Obviously, we're back where it all started, where the channel all started, home for the holidays. So excuse me for traveling and having to take care of some things the last 2 days, but we're back. And so without further ado, let's get into the video. So it kind of seems like any major new electric vehicle car company or new energy vehicle company is kind of in this war for survival right now. And next year is really going to be where we see companies starting to fail, in my opinion. And so NIO's stock price is a reflection of investor confidence today. It hasn't done so well this year, and it's clearly not in an uptrend. So the question we have for ourselves today is, has NIO truly fallen behind the competition? Is that what investors are thinking? If we go by the market, then you're not wrong to assume that that's what investors could be thinking. In October, NIO delivered 16,000 vehicles, marking a 60% year-over-year increase. However, when we look at the competition, XPeng and Li Auto have been gaining traction at an even more rapid pace than NIO. NIO's stock's clearly taken a beating. It's dropped from its 2021 high over 85%, and the stock hovers somewhere around $8 per share these days. So let's talk numbers. Returns for NIO investors, such as myself, have been a roller coaster lately. Minus 35% in 2021, minus 69% in 2022, and minus 19% this year in 2023. Compare that to the S&P 500 and it's a stark contrast. And even if you look at the PE ratio, which is a clear indicator in the stock market, it's 1.26. Compare that to the competition as well. XPeng and Li Auto boast PE ratios of 2.86 and 3.4 respectively. So right now the electric vehicle market is like a high stakes poker game. NIO is obviously holding its cards close. With the recent 10% layoff announcement and obviously a stock that's has seen better days, there's obviously questions that linger. Is NIO losing its edge in the electric vehicle race? What's the deal with the delays in the Alps brand? And can NIO find its footing amongst the price wars? Traditional automakers like BYD and Geely are clearly flexing their muscles at this time. They're recording record-breaking sales. Meanwhile, NIO's market cap has dropped below $8 billion. And there's competitors who we've never even heard of showing valuations of $13 billion like Jai Krypton. Is this a clear sign that the electric vehicle giant is taking some steps backwards? As the electric vehicle market undergoes this sort of metamorphosis, survival of the fittest becomes more evident. CEO of Li Auto predicts a 3-year cycle of where new energy vehicle companies get eliminated from 2023 to 2025. We've already seen WM Motors file for bankruptcy not too long ago. This was very recent. Are we witnessing a seismic shift in the electric vehicle industry, and what does this mean for NIO's future? NIO's layoffs may be a strategic move to weather the storm, but the challenges persist. No one can ignore this at this point. With Alps launching new products in 2024, can NIO regain its competitive edge that it once had? In this electric odyssey, The competition is fierce, and only those who can endure will survive. I surmise that one future is a future where we see Alps begin to take more market share than NIO and really begin to lift the brand off the ground. I mean, if we look at Lexus and Toyota, the relationship that they have, Toyota obviously sells more cars than Lexus, and Toyota was a thing before Lexus. And you know why? Because there's a bigger market for the mass market. If we look at Honda and we look at Acura, if you live in the US, you clearly see more Hondas than you see Acuras, because not everybody can afford a premium vehicle. And so NIO kind of did things backwards, where they released the premium brand before they released the mass market brand for consumers. We'll keep a close eye on NIO's journey through Alps. I think that's going to be very prevalent next year, and we'll see if NIO can pull themselves out of the fire and once again shine at the top of this game. This was our 100th episode. I hope you guys found it enjoyable. We don't sugarcoat anything. We try to get straight to the point. We try to give it to you as objectively as possible, and I hope you guys can appreciate that and find value in it. Anyways, this is Obi signing off. I'll catch you guys in the next episode. Thank you for tuning in for 100 episodes.